What happens to growth and value strategies when you eliminate the muddle in the middle? Our research has shown that S&P Pure Style Indices' stricter definition of growth and value have historically led to greater returns than traditional style indices. In addition to using these precise tools to unlock alpha and satellite strategies, some advisors are using S&P Pure Style as tactical multi-factor tools to manage risk at the core. Hello, I'm Paul Murdoch, and joining me today to discuss tactical applications for S&P Pure Style are Lisa and Mark Bova, co-founders of Linity Financial. Lisa, Mark, thanks for coming in today.
Good to be here.
Thanks for having us.
So Lisa, we know you as tactical goals-based advisors, but there's actually a first step in your process that's emotion-based. Can you walk us through EQ and EI and where that fits in your investment process?
Absolutely, Paul. One of the first things we do when a client walks into our office is to ask them a little bit about their history with money. And sometimes they don't really understand what we're saying or asking until we talk to them about their family. What was it like when they were growing up? Once we open up or unlock that information from our clients, we learn and they learn. We learn what their biases are, what their comfort level or lack of comfort is with risk or spending habits. And that's really a critical piece to what we do in our process because it helps us to know really what their why is, what their emotional intelligence is. And that's important because when we match that up with the next step in our process, which is learning what their near-term and long-term goals are, that together combined comes up to their risk budget. And so once we know a client's risk budget, we then know, tactically speaking, whether to overweight, underweight, or go neutral, a sector, segment of the marketplace, or even risk. And after that, once we know the risk budget and we figured that out, we actually educate our clients along the way as well about our capital market assumptions. And the reason we do that is because, as you know, knowledge is power. And when a client has some level of knowledge as to why each position is in their portfolio, it gives them more comfort as well.
Well, thanks, Lisa. So, Mark, then, after you've discussed goals, you turn to available strategies. I'm curious, where do the S&P Pure Style Indices fit into that conversation?
That's right, Paul. So first we understand our client's level of risk budget. Then we share with them our capital market assumption. Then we want to be able to articulate that capital market assumption in the most precise way possible. That's where the S&P Pure Style indexes come in. So what we found is that the Pure Style indices offer the growthiest of growth stocks and the valuiest of value stocks. And how they do that is by eliminating the middle and the overlap that is typically found in a style index. For instance, the S&P 500 Pure Growth Index has roughly 104 constituents, and the S&P 500 Growth Index has about 295. So 295 versus 104. And finally, this index reconstitutes and rebalances on an annual basis.
When we think of, you've hit on this precision element, and we think of S&P Pure Style as precision tools, but I think it's really interesting. You guys also consider them multi-factor tools. Can you walk us through that?
What happens with the Pure Style Growth and the Pure Style Value is the parent index is the S&P 500. And from there, there are literally three factors that help to determine which companies go into the growth and which companies go into the value. So those three factors are 3 years sales growth, earnings change to price, and momentum. And also, if you consider it, size and style. There are the Pure Styles S&P 500, Pure Styles 600 and 400. So those are all factors, and we really consider them multi-factors because even in the process, it's factor-based.
You consider them multi-factor, but then I wonder, even though they're tracking passive indices, do you view them as active strategies?
The S&P 500 over the last 10 years has had roughly 5% turnover, as opposed to the S&P 500 Pure Growth, which has had closer to 60% turnover. So we look at those two numbers and we thought there was a real standout there. We would actually expect an active manager to have roughly 60% turnover in any given year. We also think that the strategy of the pure style is actually similar to what an active manager might employ, with the rules based. If you think about programming and having programming an algorithm, these are some of the same factors that we would likely program within that algorithm that help us identify that universe of stocks of which to purchase. Also, when we think of active versus passive, that conversation, we conclude active just simply based on the fact that the stocks that are in the pure style index are a subset of a parent index. So you have the parent and then you have a subset of that universe. We would argue that that is in itself is active. And finally, there's this thing called active share. And we found that active share was prevalent in the pure style strategies across each one of the size categories. So as Lisa had mentioned, there's a pure style, S&P pure style, S&P 500 pure style growth and value, S&P 600 both growth and value, and S&P 400 pure style, both growth and value. We found active share to be present in all three of those categories, and for stock selection as well as weighting. So you think about the S&P 500, that's a market cap weighted index. The pure style indexes are weighted according to the style score. So those are the reasons that we concluded on active versus passive for the pure style indexes.
Great. So you've got these sharper, precise, multi-factor tools. Yeah. How do you go about implementing S&P pure style indices then in your practice?
Our clients have a risk budget. They have a finite amount of assets to work with. We want to allocate as little to equities as possible to and still achieve our clients' goals. Given the risk characteristics historically of the pure style indexes, we'd expect them to exhibit a higher level of risk as measured by standard deviation and beta. The way that we tactically use the pure style indexes within our portfolio, we use exchange traded funds that seek to track the performance of those indexes. In order to do this, we actually are able to allocate less to equities or that segment of the market than we might otherwise, which allows us to allocate what we're not allocating to equities to near cash or another asset class. So it really frees up a part of that portfolio to be able to do some other things from a diversification standpoint.
Well, thanks, Mark. So, Lisa, final question to you.
Yeah.
There's a lot of multi-factor strategies out there. Why did you land then on S&P Pure Style? What characteristics appealed to you?
Well, we value automation, consistency, reliability, and rules. And these are all things that the S&P Pure Styles provides. So automation is a big topic out there today. And the Pure Styles have been around with security selection since 2005. So the process itself lends itself to consistency and reliability, and we can access both back-tested and live data performance and measurements that we can use in order to see how the strategy worked in various market cycles, and that's very important for our clients.
Great, yeah, that index history really allows you to see the market cycles and really position.
Absolutely.
That's great. Well, Lisa, Mark, thank you so much for joining me today to discuss S&P Pure Style.
Thank you.
Thank you, Paul.
If you want to learn more about how indexing works for S&P Pure Style, visit us at spdji.com, where you'll find our latest data and research on Pure Style and across the entire factor spectrum. Thanks, and have a great day.